Welcome to The Explainer. Today, we are diving deep into corporate governance in emerging markets. And what you'll find is that it's a world where the official rulebook, well, it's important for sure, but what's not written down, that can matter a whole lot more. So, let's start with the central idea for today, this constant tension between how things look on paper and how they actually work in the real world. Think about it. When you look at a company's organizational chart, are you really seeing the full picture? Do you know who's truly pulling the levers? This is the absolute key question for anyone trying to understand businesses in places like China, Brazil, or South Korea. And here it is, the core conflict. On one side, you have form. This is the shiny facade, all the global codes, the independent directors, the committees. It's everything that looks great to international investors. But then you have substance. That's what's going on behind the curtain. It's all about who really holds the keys to the kingdom, who truly controls the company's money and its future. All right, let's make this real. Our first case study is China, where we'll see exactly how this plays out in a system where the state is, without a doubt, the ultimate power player. You know, the speed of change in China has been just breathtaking. I mean, it started back in the 90s just trying to turn these huge state-run companies into modern corporations. Then, in the 2000s, they started bringing in all the modern tools, like independent directors. But all this rapid change created something really unique, this complex dual structure that we see today. And this gets right to the heart of that dual structure. See, on one side, you've got the CSRC. They're the official market regulator, and they enforce all the form. But then on the other side, you have SASC. This is the incredibly powerful arm of the state that acts as the controlling shareholder. They are the substance. They influence everything, from who sits on the board to the grand long-term strategy. And sometimes they do it through direct ownership, but other times it's through these internal party committees that quietly guide the big decisions. So what does this actually mean for an investor? Well, it means you have got to look way beyond the balance sheet. The opportunity in China is massive, right? Huge scale, tons of liquidity, and transparency is getting better. But the risk is just as real. The state's goals might not be your goals as a shareholder. The key takeaway? Your analysis has to include a very clear-eyed assessment of the state's influence. Okay, now let's hop over to Brazil and look at a totally different power structure, the family, and see how that shapes the way companies are run. Brazil's story is so interesting because it took a completely different path. Instead of the government forcing reforms from the top down, the market itself created the solution. See, Brazil had this history of pretty weak investor protection. So to attract foreign money, they created the Novo Mercado. It was basically a premium club on the stock exchange. To get in, you had to adopt much stronger governance. All of a sudden, good governance became a real competitive advantage. And out of this market-driven pressure came a really clever innovation, especially for Brazil's powerful family-owned businesses. The Family Council. The best way to think about it is like a professional buffer zone. It's a formal place for the family to talk about family stuff, succession plans, who gets a job, dividend policies, without letting all that messy family drama spill into the corporate boardroom. And the benefits here are just huge. First, you get clear lines of communication between different generations. Second, you keep family squabbles from poisoning the business. And maybe most importantly, you build a much more resilient company by setting down clear rules for the future. It's really about making sure the company can thrive long after the current generation is gone. All right, for our final case study, let's turn to South Korea. This one is a fascinating hybrid model, a market completely dominated by these enormous family-controlled conglomerates. And of course, we're talking about the chaebol. You definitely know their names, Samsung, Hyundai. I mean, these are global giants, but their governance is built on this very unique structure that's just deeply, deeply rooted in family control. So if you just look at the form, the stuff on paper, a company like Samsung Electronics looks fantastic. They've boosted board independence, they have better financial disclosure, they talk to their international investors. They are ticking all the right boxes for sure. But, and this is the big but, when you dig into the substance, you find that ultimate control is still firmly in the hands of the founding family. It's exercised through these incredibly complex ownership webs and influence that stretches across the entire group. That's the hybrid model right there in action. So, we've looked at China, Brazil, and South Korea. Let's pull these three very different stories together and figure out what the big takeaway really is. So what does all this mean in practice? Well, this chart lays it out perfectly. For China, it is all about the state. For Brazil, it's all about the family. And for South Korea, it's the chaebol.
The point is, in every single one of these markets, your focus has to be on understanding that core power structure, not just reading the official rulebook.
Okay, if you remember just one thing from this entire explainer, please make it this. Across all these emerging markets, the official rules, the form, they're all starting to look more and more alike. But the real power structures underneath, the substance, they are staying very, very different. And this all boils down to two very practical lessons. If you're an investor, it means you have to go deeper than a simple checklist. You have to ask yourself, who is really calling the shots here? And if you're one of the owner-managers of these companies, the lesson is that good governance isn't some threat to your control. It's actually a powerful tool for building a credible, lasting business.
And that leaves us with this one final powerful thought. To really, truly understand a company, you have to look past the beautiful facade and really examine its foundations. It's not just about knowing the rules that are written on the page, it's about understanding who's holding the pen.